Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So today our weekly report we have dedicated to, as usual, to fundamental analysis, in particular on the components of the CPI index. Have taken the in-depth view on what particular component, what particular economy spheres have changed, what spheres have added inflation to the index, and which one have made some decreasing effect on the overall inflation. So I have made some conclusions on this subject. So if you're interested, you could read about it. That will shed some light on the perspective of the euro performance and in general on the Fed policy and how it could impact in general on statistics as well. But at the same time, we have to remember that actually CPI, this is just a reflection, the indicator of the ongoing processes in the United States economy. So not the CPI itself bringing decreases, it just shows that the economy has the problems. And our task is to understand what particular problems are and how inflation could change and impact on some components. So this is what we have done in this weekly report. Speaking on the technical side, we still keep our target, long-term target, untouched. So we expect 90 even below the parity on the euro currency in the midterm, although recent data changes and changing in the policy of the Fed, of the Joe Biden government, leads to the conclusion that dollar appreciation in the nearest few months might become slower and more choppy than was initially suggested, just because of changing of the policy of these two authorities, as I said. But still, we think that the advantage and the position of the United States economy is much better compared to the European Union, especially as we're coming to the winter period, where the problems in Europe probably will be higher. So that, as I said, makes us keep the long-term bearish view on the euro currency. In general, if you take a look at the weekly chart, you will see that the picture is more look like bearish rather than bullish, and it makes us to keep an eye on possible bearish patterns on the daily and intraday charts. Currently, you could see that market is calling around first resistance, which is 103.60, and right there we have 104.60, 104.65 area as a 618 support, but in fact this is weekly confluence, 104.40, 104.60. That is accompanied with the daily overbought. Well, it is easy to understand that we would be very happy to get the bearish position or the pattern that let us take the short position around this area. That's actually what we need to keep an eye on. And I would be probably happy if we will get something of this kind. So you can see we have the ABCD pattern with the OP around 104.20, which is very close to the weekly resistance. That could give us the currently steeple to sell. That would be perfect for position taking right at the weekly confluence and daily overbought and agreement area. So this is perfect area where we should get at least minor bounce and is relatively safe trying to take the short position. OP could be different, so I usually take a look at the initial ABCD and the first OP. Just because we are taking the short position, you need to get the entry point slightly below the major resistance. That just make it a bit easier. While with this another ABCD pattern with the same A point but different BC legs, we get the OP around 104.75. That is closer to the confluence, but it's less chances that it will be completed because this is still secondary OP the primary OP has more technical value than the secondary one, and that led us to take the position easier right below the conference where market will be still on the way to it. But in general, that makes no big changes, and actually this is just minor question. So because the core, the idea of this pattern stands the same. At the same time, to be sure that market definitely will keep going higher, we need to keep an eye on a few levels on the hourly chart as well. So we could see that although on Friday market has started nice, on Thursday we said that probably market should keep going higher with this support area. It has started nice, and in general it's moving back to the top, but later on Friday it has failed to keep going higher and turn to the downside retracement. Here we have to keep an eye on the deep Gartner's triple to buy pattern with the XOP around 102.14, and that creates an agreement with the 102 conference support area. This is really good levels, just because if you'll take a look, this is major 3.8 support, and the 618 level is also based on the very important reaction point right there. So this is really very important. Normally, if market is really bullish, this is more than enough to hold price and reestablish our protection. So downside breakout of this level doesn't necessarily mean that bullish context is over and market will keep going lower, but this will be significant hurt to the bullish context. And preferably do not get it. I mean the breakout of this level. Preferably we would like to get reaching of this area and reestablishing our protection. That's what should be the perfect action. That's why if you would like to take the scalp long position on the hourly chart, that's the level that you could keep an eye on. Just avoid fast downside action, something of this kind. So if you will see here this collapse, do not take the long position. Action should be careful and actually gentle, and it will be perfect if we will get here some bullish reversal pattern, something like butterfly here or maybe head and shoulders. That will just support the idea of the possible reversal. So these two steps for considering next week. Bulls could keep an eye on this level, but this is just for a tactical short-term trade, while bears should do nothing, just wait when this pattern will be completed and watch for 104.20 area. It's potentially the one where we could consider taking the short position.